Good evening, all the joinees. Thank you for joining in. Hi, this is Ashi. Welcome to the webinar conducted by NGEN Research. Meanwhile, others join in. Let us have a look at today's topic. So today we'll be analyzing young funds that have typically completed less than 5 years in the market. We'll be shortlisting the funds using the query tab, followed by having a performance analysis versus to that of the benchmark. And at the end, we look at risk versus return and drawdown analysis, followed by point-to-point analysis too. And lastly, the forum will be open for a Q&A session. Now, this is the landing page of the NGEN Markets. For today's topic-related discussion, we'll be utilizing Funds and the Compares tab. Now, I'll move towards the Funds tab. Now, this is the landing page of the Funds tab, wherein the screening of the mutual fund takes place, and also the selection part by applying certain relevant filter parameters. Now, in the screener section, filters can be applied basis minimum criteria. Let's say you only want those funds that have completed minimum of 1 year in the market and not more than 3 years. To get the list of young fund, definitely you can input one in the minimum age section. Now, what about my cap of not more than 3 years? Because as soon as I hit on apply, and once I scroll towards the right hand side, you can see the very last column that mentions the age of the fund. The system will give me funds that have not only completed 1 year in the market, but also more than 3 years, which is not something that I'm looking for. Now, to counter such problem, we have a query tab. Now, this is the second tab under the funds section itself. Query is a robust feature on the platform wherein you can also build your own screener. Now, continuing with the example of shortlisting young funds, we would now be applying certain filter for the same. Now, under statistics filter, the first filter parameter that I would be selecting would be asset class. I'll simply click on this drop down and select asset class right here. And then I will click on the second drop down and select equity as an asset class. Once this is done, I'll then click on add condition. Now, as soon as I click on add condition, you can see that the system is showing me that there are total 909 funds from equity as an asset class. Now, to narrow the list down, I'll input date as a filter parameters so that I can get my young funds onto the list, making sure that these young funds have not completed more than 3 years in the market. So in that case, again, under statistics filter itself, I will click on this drop down and select launch date as an option. Once this is done, in this from section, I will change the year to 2021 and my 2 year would be 2024. So again, making sure that the funds that are getting shortlisted have not completed more than 5 years in the market. Now I'll again click on add condition so that the system can take it into effect. Now, once this is done, we can see that the system is showing that there are total 248 fund basis the date-wise parameters that I have applied to equity as an asset class. Now, as soon as I click on show 248 funds, I can see that the list have come up right here. Additionally, what I can see is that not only the asset class is equity, but the sector that is getting captured is all of the sectors or the category under the equity as an asset class. So we can see some sectoral funds, we can see index fund, we can also see ETF right here. Now let's say I want to restrict my study of young fund between two categories, that is value and flexi cap fund. So in that case, I'll again repeat the same procedure. This time under statistic filter, I will select SEBI category as my option. So once I click on SEBI category, the next thing that I would do is select my very first category that I'm looking for, that is flexi cap. In that case, I will click on this drop down and this is arranged in alphabetical order so I can quickly find flexi cap right here. Once this is done, I'll click on add condition right here. Now we'll move towards the second category of study, that is value fund. Now again, I would repeat the same procedure. I'll click on the drop down where flexi cap fund is mentioned and then I will change it to value cap. That is value fund. I'll click on value fund right here and then I'll hit on add condition. Now, as soon as I've done this, what we can see is that the system is showing zero funds. Now, why did this happen? Now, here we can see that there are two logical operators that are present onto the platform. First is and second one is or. Now, when the logical operator is on and, this means that the both conditions should be fulfilled. Now, since there are no funds that belong to both FlexiCap as well as value fund, the correct logical operator right here would be or. So I will change this to or. Now, as soon as I change it to or, brackets are something that needs to be reset to let the system know the universe of the research. So here we'll have an opening bracket as well as a closing bracket right here. Now, since we have an opening bracket right here, I will remove the second one. And this would be our closing bracket. So again, I'll remove the other one right here. Now, once this is done, we can see that there are 14 such funds, specifically young funds that are either from FlexiCap or value category. I'll just click on show 14 funds right here and we can see the list which is appearing onto the right hand side. Now, this is just a one-time exercise that you're required to do. You can anytime save this query by clicking on save this query as an option and by simply giving it a name. Once you have given it a name, you can anytime locate it under Load Saved Query tab. So your list would be right here. Additionally, what you can do is you can also download an Excel sheet for the same and take the funds to the compare section for further analysis by clicking on this compare icon. So as soon as you click on the compare icon, in just one click, the entire list in one go will get loaded in the compare tab along with some parameter wise information. Now, before we start with the analysis in the compare section, just to add, in the query tab, you can select as many filter as you wish. There is no limitation and you can input the range to get your desired list right here. Now we'll move towards the compare tab. Now, as soon as the funds get loaded in the compare section, the details of the funds that you see here would be since the inception of the funds. Now, so to have a fair analysis, we'll select a common start date for the same. Now, let's say you want to analyze the performance of all of these funds in the compare section basis 1 year or 2 year time period. For that, we'll click on the settings wheel icon, which is right beside the word returns column. I'll click on this settings wheel icon and I'll take up a start date as 30th May 2023. So I'll select the date accordingly. And then I'll simply hit on go so that the system can take it into effect. Now, once done, the system will send you a prompt stating that a custom start date is being selected. Now, in this section, you can not only compare the list of funds among themselves, you can also compare it with the relevant benchmark. So we'll search for the relevant benchmark, which is Nifty 500 TRI for both value and FlexiCap fund. So in the add other items, I'll just search for the relevant benchmark right here. Now, as soon as this gets added in the blue color column or row, you would be able to find the benchmark has been added and it is highlighted right here. Now, the first parameter that we would be looking upon would be this cumulative return. Now, cumulative return is absolute or point-to-point return that is being generated by the fund basis the time period that we have taken under consideration. Since we are analyzing this fund from 2023 till 2025. So you can definitely sort this anytime basis highest to lowest or lowest to highest. Now, if you want to sort these funds basis the highest to lowest cumulative return that is being generated, you simply have to click on the word cumulative return right here. Now we can clearly see that there is a value fund, which is quant value fund, that has generated highest cumulative return of about 67%, which is higher also in comparison to that of the benchmark, which is generating a cumulative return of 47%. All of the funds that you see below the benchmark were not able to outperform the index basis the parameter that we are looking upon, that is cumulative return. Whereas all of the funds that are right above the benchmark were actually able to beat the benchmark in terms of generating cumulative return. Additionally, you can also see that this particular fund has also generated a highest CAGR. That is the average rate of return that a fund has generated on an annual basis, which is of 29%, which is not only higher in comparison to its peers, but also higher in comparison to the benchmark, which is to an extent of 21%. Along with this, you can also see the standard deviation, which is the measure of volatility, which is also quite high for quant value fund, which is to an extent of 19%. Whereas if you want to sort this basis lowest to highest, again, you can simply click on the word standard deviation and accordingly this will get arranged. And here we can see that Sundaram FlexiCap Fund has the lowest standard deviation, which is about 12%. The next parameter that you can look upon is the Sharpe ratio. Now, Sharpe ratio is risk adjusted return, which tells us how the fund was doing in terms of generating return in comparison to the risk that has been taken. Now, higher the Sharpe ratio, the better it is, preferably more than one. So, definitely you can also sort this basis highest to lowest in terms of Sharpe ratio, again by clicking on the word Sharpe. And here we can clearly see that the highest Sharpe ratio among the list of funds that are there in the compare section, we have Invesco India FlexiCap Fund with a Sharpe ratio of 1.29. Again, not only higher in comparison to its peers, but also higher in comparison to that of the benchmark. Now, the next thing that we would be looking upon would be the drawdown analysis. Now, this is the third tab in the compare section itself. Now, as soon as you come towards a drawdown analysis, this basically helps you to understand the strength of the fund to recover from its losses. Now, losses are inevitable not only for the older funds, but also for the young funds. But how quickly they are able to recover from the loss is something that matters. Now, in the drawdown section, you would be able to see the details of the top 5 worst drawdown. Now here, size basically represents the worst loss that a particular fund has faced. Length basically represents the number of days it was in that loss. And finally, the last column, which is recovery, talks about number of days it took to recover from that loss. Now here, basis the second worst drawdown, we can see quant value fund had a loss of about 10%. Now, this particular fund was in this particular loss for 1 day and it took 19 days to recover from this loss of 10%. Now, to get further more detail as to what was the date of the drawdown and also what was the fall in the NAV and exactly on what date did it recover, you can click on the chart icon right. Now, as soon as you click on the chart icon, you would be able to see that the details of top 5 worst drawdown for a particular fund is now coming up in a graphical presentation as well as a tabular manner right below it. Now here, as we were analyzing that there was a loss of 10% for this particular fund, that is quant value fund, which was between 3rd June 2024 till 4th June 2024. And we can see it was in this loss for 1 day. During this particular period, the NAV fell from 20 to 18 and it took 19 days to recover. Now, when did it finally recover? It finally recovered on 1st of July 2024. You can also see a graphical representation right here, wherein the gray section talks about the recovery, the loss phase, and the white section basically represents the recovery phase. Now, this particular tab has an advantage wherein the sorting can be done in terms of recovery, and you can check which all funds were able to recover faster from its worst drawdown, not only in comparison to its peers, but since we have also added a benchmark, you can check which all funds were actually able to recover at least faster from their benchmark. Also, there are certain ongoing recovery, which is also something that is highlighted onto the platform. Now, after drawdowns, the next thing that we would be looking upon in the compare section itself would be this risk versus return scatter plot. Now, this is a risk versus return scatter plot wherein you can definitely custom your own start date and end date, wherein the x-axis basically talks about the risk, that is standard deviation, and y-axis takes under consideration the annualized return. Now, it is divided in 4 quadrants. On top left, you can see low risk high return. Bottom left is the quadrant of low risk low return. On the right hand side top is high risk high return and bottom is high risk low return. Now, if the funds are plotted on the extreme right-hand side, it means that the risk percentage is quite high. And if they are plotted onto the left-hand side, it means exactly the opposite. That is, the risk percentage of that fund is low. Similarly, if the fund is plotted onto the top, this means that the return percentage is quite high. And in case if they are plotted onto the bottom, this means that the return percentage is lower. Now, as per the latest update, we have also added this gray color reference line that divides the chart in four quadrants based on risk and return level for easier understanding as well as reading. Now, let us try to compare two funds from a particular quadrant. Let's take, for example, 361 FlexiCap fund. Here we can see that this particular fund has taken a risk of about 17% and generated a return of about 12%. Now this we will compare against Baroda BNP Paribas FlexiCap fund. Here again we can see that the risk percentage is somewhat similar to 360, which is about 17%, and the return percentage is about 9%. Now both of these funds we can clearly see are taking similar percentage of risk. But we can see that 361 has generated a higher return, which is about 12%, whereas BNP has generated a return of only about 9%. So 361 FlexiCap can act as an alternate to Baroda BNP Paribas FlexiCap fund since it is generating better return similar to the risk percentage of the other fund. So this is how you can read the scatter plot and suggest the fund to the client basis their risk appetite. Now, after risk versus return scatter plot, the next thing that we would be looking upon would be this point-to-point analysis, which is the second last tab onto the platform. Now, point-to-point tab basically helps you to understand what if lump sum investment is done towards different funds, what would have been the result basis multiple scenario taking under consideration the time period. Now here you can definitely input a lump sum value. Now let's say you want to check what if 50 lakh is the invested value. So we'll just edit this 50 lakh right here from 1 CR, and then we'll click outside the box so that the system can take it into effect. Now let's say you want to check it basis a YTD scenario. So for that, we'll edit the start date and end date accordingly. So all of the 5 date column that you see here are editable. So now let us put a start date in the very first column. So I'll take 1st Jan 2025 till the recent date, that is 29th May 2025, to create a YTD scenario. You can also click on the word sort in terms of sorting this basis highest to lowest or lowest to highest final value that is being generated. And the data that you see here is in terms of amount. If you want to check the data in terms of percentage, you can simply click on CAGR as an option. Now let's say if period is less than a year, for that let us try to understand by creating a scenario. So the recent event wherein retaliatory actions were taken by our country through Operation Sindoor, during this particular event, Indian market were quite volatile. Now to check the same, we'll input the same start date and end date right here in the very last column. So I'll take up the start date as 7th May 2025 and the end date would be 9th May 2025. So this is a 3 days period scenario that we are doing. Since the period is less than an year, we have an option called absolute. You simply have to click on it. So anytime you select a time period which is less than an year, you can definitely click on absolute as an option. Also, you can sort this to know which all funds were generating the negative returns basis highest to lowest or lowest to highest. If I sort this from highest to lowest, we can see that Helios FlexiCap fund has generated the highest negative return during this particular period, which was to an extent of 2.46%. And again, if I sort this lowest to highest, we can see Sampo fell the least, which was about 0.31%. You can also generate a chart report by clicking on this chart icon right here. And also you can take a screenshot for the same. Let's say if you want to highlight this in PPT as a reporting option that is present in the compare tab. So to generate this report, you simply have to click on the PPT as an icon and a report starts to getting generated. And this is how it will basically look like. So all of the reporting option basis the PPT that you see onto the platform are editable, and this will come up with co-branding. So on top left-hand side, you would be able to see your company name and logo. So this is the first page, which basically consists of the name of the fund, the list, and the benchmark as well. Also, you can find some basic information related to that particular fund. The second page consists of the parameter wise information. Then we have here is risk versus return scatter plot. Then we have what is the split in terms of large, mid, small. Also, you can find tab related to overlap. Similarly, you can find NAV related chart right here, and what is their month on month and year on year return generated by the list of the funds. Similarly, you can also find calendar year wise return that is being generated,
जाना है
and
थे
also
जाना है थे जाना है
rolling
तुला
information is mentioned right here.
जाना है
Now, let's say you want to add a particular slide. We have provided you with a master slide right here. And let's say you definitely want to highlight the scenario that we were looking upon. Once you have generated a screenshot, this will get saved onto your system. You just have to locate it and you have to insert the image right. So this is how you can edit the slide accordingly, basis adding or removing of the slide, which is available in PPT as a reporting option. And the last page being the disclaimer. So that was it for the product related webinar today. The forum is now open for a Q&A session.
Can you just show how you have just added that screenshot?
Sorry, could you repeat your question?
Lastly, the screenshot has been added in PPT. How that
Correct,
has
correct.
been done?
Yes. So right here in the point to point tab itself, you could see a graph like icon, which when clicked on gives you a page that will show you the returns that way. And just besides that, on the right hand side, there's a camera icon. You could click on that camera icon and a screenshot of this specific section gets generated, which can then be input into the PPT slide. So this was
Okay.
typically in the point to point tab, wherein we helped you with a screenshot. On the platform itself, we also have screenshot options, which lets you take screenshot of any other tab that you want to take a screenshot as well. Next to the PPT icon, it's there.
Okay.
Ma'am, can I export the data in Excel sheet with the all schemes details like returns, short-term returns, and the ratios?
Yes, so in the main list, you would see an Excel icon. So almost all the tabs that you go on, we do have provided Excel icons as well. So you could click on this Excel and all the details that you see on that respective page will come up in the Excel.
Can you show me the example of rolling returns the Excel look like?
Sure, sure. So in the rollings, we've just generated the Excel. Yeah. So this is how the Excel will come up. All the columns that you saw in the rolling returns tab comes up into this Excel as well.
Okay. Thanks.
Sure.
Hello.
Yes.
Hello. Yeah, in this your fund escort is not coming.
Sorry.
Fund escort.
Fund score will come up in the Excel, which is downloaded from the main list. We
Okay.
downloaded the Excel from the rollings tab. So if you download the data from the main list, you will get the fund score as well.
Yeah, how frequently fund score data is updated or changed? Is any frequency?
Yes, so the fund score changes on a month-on-month basis. Monthly basis, we change the fund score, and you could also view that when you load a fund in a new page. Click onto that black tile, and it will give you the month-on-month fund score data for each of the fund.
So in this, the Prague Parak is having the highest 9.54.
Correct. So fund score that way is comparable intra category only, that is within category comparison. So in this category of flexi cap, Parag Parikh has got in fact the best score in the previous month that we are analyzing, that is as of April 30th.
Okay. And do you have something that this fund is having the highest consistency, something like that? The score
Uh,
consistency?
I mean, in terms of score consistency, you can anytime load a fund and view their movements onto this line graph if you see right here. So we've plotted this data from November 2022 till the latest month. So in terms of consistency, you could simply click on that. Let's say we click on Parag Parikh now, and you will be able to see how consistently it is giving a score. Right. So here we could see that this fund has been giving a score of 8 and above from the month of March 2023.
Okay.
And sorry, Arnab, just one more thing to add. The fund
So
score
come to the beginning, when this fund has the lowest score, come to the beginning.
right in the beginning, but the fund score itself shows you a good level of a good idea of how consistent the fund returns have been. So the score itself is a pretty good indicator of consistent performance. A high score would mean that the fund has been consistently performing because it looks at various different time periods to come up with this.
Okay.
So
But
the
tomorrow
score
there
itself-
may be the fund which is having the 4 and 5 score.
Yeah.
That may be the better one also.
It could start performing better, of course. That is obviously that's always possible.
And the fund doing or having the higher score may go down also.
That's, of course, that is absolutely possible. These are obviously measures that are created using data that we have. But of course, something that has a high rating can easily perform badly and vice versa.
Okay. So in that case, any other parameter which can help us to choose the fund?
Look, I mean, this parameter, one good thing about this parameter is that it's consistently applied to all funds in the same way. So
Okay.
now, thinking about future performance is obviously very hard. It's impossible to basically come up with a measure that can be consistently good. But the good part about the fund score is it looks at various different parameters. It looks at returns, it looks at risk, and it looks at returns and risk over various different periods of time. So it could be that a fund that has a very good score can underperform for a little bit. But generally speaking, the only way a fund will have a very good score is if it has excellent performance for several years compared to others in the category.
Like just to click on the Kotak Flexi Cap, because some point in time Kotak was also doing too good, like
Yeah,
Parag Parag and all.
Yeah.
So have ever that fund has got the 10 score or 9 score?
So right now the score is a little lower. It's not really been that high before. Because we are looking at returns and risk, and you can see the risk score is a bit low for this fund. So it obviously means that even though the returns were good, the volatility was a bit high compared to other funds in the same category.
Okay. But this fund, what is the highest score you have given in this 3-4 years?
I think it's near the high right now from what it looks like, about 5 or 6.
Okay.
Out of 10.
One suggestion into this, that you have 3 parameters: risk, return, and your scoring.
Yeah.
I think both of the lines which you have kept in gray, you need to change the color accordingly.
Okay.
Because sometimes it's add to the confusion, and the reference rating which is there,
Yeah.
pertain to the same color.
Got it. Yeah, that's a great idea. So let's guys, let's slide this down. We can use the legend to denote the number on the top also, and both the colors can be different for risk and return. Thank you, sir.
Yeah. And one more thing that just to the person who's presenting, if you go back to that where we have selected the funds at query tab, like you have opened you have kept within the brackets from flexi to value. If I need to add 4 or 5 categories, then I have to keep that first fund as open bracket, and last one should be in the closing bracket. There should not be in between. There is no other bracket. Like if I want to add large cap into this and the same mid cap into this.
Yes, that is correct. So more like a mathematical operation, you keep the first and the last bracket and make sure that in the following you keep the condition to be or.
Yeah, that is fine. That I understood.
Yeah. So the first and the last bracket, more like a mathematical operation that way.
Okay, thank you so much.
Sure.
Yeah, hi. I wanted to know if there was some way of custom sorting in the sense that when I go to compare and I add, suppose I load a client's portfolio, which is a mixture of large cap, mid cap, say small cap. Okay. Now, what happens is I want to sort of check how they're performing against their index. So, suppose there is Nifty 100, there is BSE 250, both indexes are there. So, when I go to sort, below large cap, the large cap benchmark doesn't come. So, all the indexes come to one side and all the large, mid, and flexi come to one side. Is there any way that I can compare a mixed portfolio with their benchmarks, respectively, one below the other?
Yes, I mean, here you could bring in those funds. It's just that right here you could sort it basis any of these columnar data that you see. You add those funds that form a part of your client's portfolio, you add the respective benchmarks as well. And then you can put in your start date and basis any of the columns that you wish to sort it accordingly. It gets arranged in that way. That is how we arrange the data.
No, but it's not arranged as per the, like, for example, if you have three large caps and the Nifty 100 TRI, and then you have three flexi caps with the Nifty 500 TRI. So if I want to arrange it or sort it, it cannot come as all the large caps, then the benchmark below it, then all the flexis, and then the benchmark below it. It doesn't sort it like that, right? That's what I was trying to understand.
Yes, so the positioning will not be like that. We will anytime sort it basis any of the column headings only. You
Acha.
put in the data, then you can sort it basis the column heading. Positioning is something that comes up depending on the column heading that you sort accordingly.
Yeah, because sometimes what happens is when a client's portfolio is big, right? They have different kinds of funds, and if they want to see it against the benchmarks, you know, then I have to again, like, suppose somebody has 20 securities in their mutual fund portfolio, and there are a lot of different benchmarks to it. To sort of compare it, that fund with that benchmark becomes a little difficult.
Yeah, just to add that we've had this request from a few people before also.
Okay.
The issue that happens is if you look at the if you scroll right and show the pink columns, which is the relative columns. Now here, obviously on the top, you can see that no matter what mutual funds you put in your list, you're forced to select only one benchmark. And if you select one benchmark, then you can see the excess return versus that benchmark in one place for all those funds. The problem that happens is, as you said, if there are 2-3 large cap funds and 2-3 small cap funds, what are you going to do? The issue that happens here is if the benchmarks of each individual fund are different, then it becomes problematic to put these numbers together because not problematic from a technical perspective, but the problem is then we're basically showing things like the excess return of one fund is better than the excess return of the other fund, while the underlying benchmarks are different. So that becomes it's like comparing two things that aren't really the same because they're comparing to various different benchmarks, which is why we kind of had it forced to kind of force this. We are aware that in some other platforms you are able to see fund minus benchmark in a line versus others, but we just feel that it's not right because this is a terrible example I'm using, but it kind of does make the point. It's like me saying I'm taller than my brother and another guy saying he's taller than his brother. It makes no sense unless we know how tall those two brothers are. So the issue that happens is putting excess returns in one table like this doesn't really make sense unless you know what the exact underlying is. And even if you know, they're actually saying, fund A beat something and fund B beat something else. So that's the reason we kind of,
No, I just mean it in the sense that, what happens is sometimes if they want to know if how the particular, let's take Invesco FlexiCap, has it beaten its benchmark or not?
Right.
Okay. Yeah. At that point of time, is there any way you add a column which just says benchmark XIR or benchmark CAGR? I'm not asking for all the excess or anything.
Sure.
But we get this a question a lot of times. Have you beaten the benchmark? So at this point of time, it's very difficult for 20 funds. Then we have to go into each fund. We have to go into this. We have to check it and that. So if there is a way to make this easier, that would definitely
so there is something we are working on is we tend to usually kind of just overlook the benchmark that the fund manager says their benchmark is, for obvious reasons. So what we do is SEBI obviously has done a great thing with giving every SEBI category a fixed benchmark. So if you're a large cap fund, no matter what you're saying your benchmark is, SEBI has said this is the benchmark for all large cap funds. So we're gathering data for all the benchmark that SEBI has declared for each of these categories. And what we will then be able to do is what you just suggested, is to basically then say that if you have a large cap fund, it will say the XIRR of the SEBI large cap fund benchmark. And right below that, you can have a small cap fund, and it will show you the XIRR of that
Correct. So
benchmark
it just
of
makes
that
it
small.
for us to easy, to show
Yeah.
basically that we were able to beat the benchmark. The active fund was able to do it. It's a little easier for us to show.
Yeah, that I think that will be possible once we are able to gather the underlying benchmark data for all the distinct benchmarks that SEBI has declared. Because once we're using a SEBI declared benchmark, then we're not taking the benchmark information from the return provider, because obviously it's independent, and in that case, the analysis should be fine.
Okay.
Thank you.
Thank you.
Just to add this to Arnab, because even I have the same kind of problem. What I did, that I have downloaded the category wise and put it into the Excel, and from there it's become a monthly exercise, where comparison become very easy for us.
Oh, you're using the category averages as a sort of benchmark?
No, I am using that, like if it is a large cap, then I'm downloading the data for large cap with the benchmark, putting them into Excel, same format as it is, and then so on mid cap and all other with their respective benchmarks.
Got it.
Then it'll become a master Excel sheet where you can refer to any fund, and you can do sorting accordingly with other ratios also. So you can mark that funds which are good sharp ratio, which are given a consistent return and all that. That become a master data. You need not to open the software again and again.
Understand. Yeah, got it. I mean, we could probably have done the same exercise using the category averages instead. But I think if you're able to gather the data for the SEBI benchmarks, then that would hopefully solve everyone's problem.
Right.
Yeah, ma'am, you have shown the data like quant value fund is fall 10% in a single day. Is it correct?
I think we viewed that in the point-to-point analysis, right? So we had put in a time period of, I think, the last column, which was 7th May 2025 till 9th May 2025.
No need a point-to-point returns. I think it's a comparing in the compare.
Main list? Are you talking about the main list?
I have shown something that quant is followed by I think drawdowns in the drawdowns.
Okay, drawdowns.
Yes, this one.
Yes. So clearly you could see right here, 3rd June to 4th June, the NAV did fall down from 20 to 18. Right? So near about a 10% loss that way, which was apparently recovered in 19 days.
Okay. So means 10% a single day. So is there
Correct.
anything happened, like we have a news section that, so why it's happened to this fund that falls in a single day in 10%?
It was a day when SEBI allegation was on quant. And all their funds have fallen that day.
Oh, okay, got it. Thanks, sir. Thanks.
Guys, just let's recheck the data on this anyway.
Yes, sir.
Hello.
Yes.
Ma'am, can you explain the risk versus return section?
Yes, sure. So this is like a scatter plot wherein on the x-axis we have annualized risk, that is standard deviation, and on the y-axis we have annualized returns, and we have divided this scatter plot into four quadrants: low risk, high return, followed by low risk, low return. Next is high risk, high return, and high risk, low return. Now, basis the time period that you set in, you could change the time period as well. By default, it will pick up the minimum common time period for the purpose of fair analysis. So, basis the time period that has been set in, you could view the plotting or rather the movement of funds based on its risk and returns as a parameter. So, currently, when we are viewing like a list of young funds in this compare section, we could see Bajaj, Finserv, FlexiCap, and Sundaram happens to be in the low risk, high return quadrant. While if at all we look upon Samco FlexiCap, it is in this high risk, low return quadrant, generating a lower level of risk, even though it is taking a generating a lower level of return, even though it is taking a higher level of risk. And as well, you could download this in Excel as well. You could change the time period as well. However, it will take up minimum common time period under consideration.
Okay, and tell me something about overlap.
Sure. Overlap typically lets you see the common underlyings between every two fund that you've brought into the compare section. In order to view the data, you could keep your cursor on any of the tile. Two funds get highlighted, one on top and one on left. So currently it says that Trust FlexiCap and Invesco FlexiCap has overlap to an extent of 42%. So the latest overlap is what we are showing. Just by clicking on the tile, you get to view what are the common underlyings between the two funds.
Okay. So overlap indicates that if a portfolio overlap indicates that the portfolio 42% or 30% both in both the fund portfolio are same. So if that portfolio will not perform well or perform well, then the effect will be reflect on both the funds.
Uh, Meaning it just shows you how similar are two funds when we consider their underlyings. So you
Anshu,
would
I would just request if you could do a proper trading session with him.
sure, sir. Yes.
I
So you
think that would be fine, yeah.
yes. So you could maybe drop your mobile number in the chat box. Our team could reach out to you for the same then.
Okay. So in the overlap sections, in the above of the chart, 0 to 20% overlaps indicates light green, 20 to 40% overlaps dark green, and subsequently red indicates 80 to 100% overlap. It means if any two funds has overlap ratio 80 to 100%, it means no use to buy both the product in one investor portfolio.
That's correct. Yes, that's right. So even 60 to 80 is quite a lot, because that means like almost half the fund, half the portfolio for both
Yes.
funds is the same. So you should take the one that is lower fees to help the client, and keep that and take the other one out. There's no point in having two funds which are 50-60% or more overlap. It's the same thing basically.
Okay. Nice. And I can customize the this overlap section according to client's portfolio and
Yes,
figure out the overlap ratio.
exactly. You can get the client portfolio uploaded to our system and very quickly run this analysis and tell them that, look, you have these funds. There's no point.
Yes.
It's the same thing.
Okay. But it is but chances are very high if client portfolio has a equity position. There is a much more chances of overlapping in the equity portfolios, whether value fund, multi-cap, large cap, or mid-cap?
Well, depends. I mean, large cap, they have a smaller set of stocks to choose from, so there will generally be a little bit more overlap. But like, for example, small cap funds should not have that much overlap. They have enough stocks to choose from. But the point is, whatever category of fund it is, there is no use in investing in two AMCs if 60-70% is the same stocks. You might as well buy one fund.
Yeah.
I mean, there's nothing wrong in having those two, but my point is that you can point this out to the client that they might be thinking they have some diversification by having two funds in their portfolio, but actually there is no diversification.
Of course. And what is correlations?
So basically, overlap will look at the underlying stocks and see what is common. Correlation is basically ignoring what the fund is holding. It's just looking at the NAV of the two funds. And this is a mathematical representation of how similar the returns are. Again, with equity portfolios, you get very high numbers. This number usually, the correlation numbers will always be between -1 and 1. The closer they are to 1, the more similar they are. So you can see these numbers are very high. But generally speaking, if you are invested in Indian equities, then your numbers will be high. But 0.98, 0.99, that means the type of return you're getting from two funds is very similar. So for example,
if I buy ITI Flexi Cap, then there is no need to buy quant value fund.
Well, technically, yeah, that's what it's saying. And you will see some, it is saying that the returns are very similar. It doesn't mean the returns are same. So for example, if ITI Flexi Cap goes up 2%, while quant value goes up 1%, and the next day Flexi Cap, one fund falls, the same fund falls 2%, the other one falls 1%. The correlation will be 100%, as in 1. So correlation does not take into account the value of the movement. It takes into account the direction of the movement. So very high correlation is not necessarily bad. Very high overlap is definitely bad. But very high correlation gives you an idea that these two funds are moving together. They are quite similar in their movements. It means in the underlying securities are obviously correlated, highly correlated.
Yes,
So
yes. But if we follow asset allocation process, then I should consider negative correlation much better.
Yeah. I mean, whatever mutual fund you buy, negative, you're not going to get in India, unless you do, some various other asset classes. But you're easily be able to get lower correlation. Just for a simple example, if you add a couple of debt funds with a couple of equity funds and look at the correlation, suddenly you'll see very low numbers between the equity and debt funds. So yes, you're right. From a portfolio perspective, you should not have a correlation matrix that looks like this, because it means you don't really have much diversification. It's either going to go up or down depending on whatever the stock market is doing.
Okay.
If you run one final point, if you run this analysis with a portfolio of 15-20 stocks in India, you'll actually see quite a nice correlation matrix gets made up if the stocks are selected from various different sectors.
Okay, and if I upload client's cash statement in this software and analyze his portfolio and figure out some correlations or overlaps, then according to report, I can restructure the portfolio.
Absolutely.
But not from the platform, but where can, but NEC, BSE, MFU, any platform you are using?
Yes. Execution is done wherever you do it. Our platform will give you the research. And this whole process that you said, we can show you properly. If you leave us your number, we will get in touch with you and we'll do a separate training session with you where we can show you how you can upload a statement, bring in the portfolio, do the analysis, print out a result report, and you can take it to the client.
Okay, I'm leaving my number.
Please. Just on the chat is fine.
Yeah.
Thank you.
I have also shared my number. Give me a call for this e-cash statement uploading and how to view that one.
Perfect. We'll do that.
And once again, can you this one explain this one, the here green, light green, and this the white one, gray color? What is this 111?
So this is a matrix, a correlation matrix. So if you hover with your mouse, like we are hovering on the 1.0 right now,
Yeah.
that is showing the correlation between the same thing, quant value fund versus quant value fund. Obviously, the correlation between the same thing will be 1, which is the highest. It means exactly the same. But if you move now to one of the green numbers, now you see 0.83 is the correlation between Samco FlexiCap and quant value. Next number,
Okay.
0.87 is, so if you hover over it, you'll see what that number refers to. So the row heading and the column heading is the same for this matrix.
Okay.
So obviously the diagonal becomes, it versus each other. That's why you have the 1.
So here, whatever fund we have chosen, the correlations are very high.
Yes, quite high. I mean,
Quite high, no?
yeah, I mean 0.8, even 0.9, you'll see quite regularly, because most funds are, the number of stocks in the Indian market which are regularly liquid traded are not that
So
many.
this correlation is in terms of the stock or in terms of the return or
No,
both?
it's the return. This is only of the NAV of the fund.
Okay. Got it.
Any more questions? Please let us know.
One question: are you working on to smart beta products or not? Separately categorize them, index ETFs or FOF.
Sorry, so are you asking if we have them available on the platform?
Yeah.
Are these, are you talking about indices?
I'm talking about that FOF index funds,
Yeah.
and smart beta products.
If they are mutual funds, then they should be available. Can you name us one and we can do the search?
Like you can look for that ICICI Nifty 200 Momentum 30.
Okay. Yeah, it is there.
And this fall in which category actually?
This is whatever SEBI has decided. So let's just see. Equity index funds.
Okay. Fine.
Sure.
Thanks.
Right. So there's a question in the chat box with regarding to the webinar recording. So this week's webinar recording will be uploaded onto our YouTube page. You will be able to view that by next week. So we have a YouTube page called as NGEN Markets, wherein you will be able to find a dedicated playlist for all the webinars. This week's webinar will be uploaded by next week. Any more questions? Please let us know. All right, Ashi, if there are no further questions, we can close for today.
Thank you everyone for joining in. You can anytime view our past recording under webinar playlist that has been created. Thank you and happy weekends.